Today I'm going to talk to you about my all-time favorite trading strategy ever that I like to call the John Wick. Now I'll call it the John Wick because we all know that when John Wick shows up to town, something big's going to happen. And whenever you see the pattern that I'm going to show you today, I can assure you that something big is going to happen, and I want you to be a part of that. Now I say it's my favorite trading strategy ever because it was this very strategy that took me from a struggling amateur and almost overnight turned me into a consistently profitable trader. And I know it can have the exact same effect for you, and here's why. Unlike other trading strategies, concepts, and theories that rely on fancy acronyms and cute little line drawings, the John Wick can easily identify, within seconds, where the biggest buyer and biggest seller is located on the chart. Not only that, but what is the level of commitment of that buyer and seller? And with that information, how I can position myself at that moment in time to make as much money as possible. So today I'm going to share with you everything that I've ever learned about this pattern. And I hope that it can deliver you the kind of success that it has me. And as always, everything will be straightforward, simple, with no clutter. All you need to do is focus on what it is that I show you and grab your mouse, push the button, and start making some money. Now, before I get started with the charts and the live trading examples, I just want to go through a few basic concepts of the John Wick strategy. That way we're all on the same page, but better yet, I want you to start training your eyes for what it is that you need to look for so you can start executing this strategy with confidence and getting the most out of it. And what we're going to do is discuss it in 3 easy steps, just a concept. The first that we want to look for is the actual candle setup. Next is the context or the path that we take to get to this actual candle. And last, we'll discuss the levels. So first, let me start with the candlesticks. And I know so many people of you have already seen these 2 types of candles. You might have even traded them before. It's classic rookie technical 101 setup, the hammer, and its evil twin or alter ego, the inverted hammer. Now, as with all technical analysis, just a tip I'm passing on, no matter what strategy you ever choose to trade, there's one thing, just one thing that we all need as a core to get it right and to give us the confidence we need, and that would be the actual significance. Ask yourself with your technical trading, what is the significance of what I'm looking at on the screen? And how can I take that information and turn it into a winning trade with confidence, right? Because it's all about confidence. So let's first talk about the hammer. Now, some of you probably already have an idea, but we're going to go a few layers deep so you truly understand what's happening at this moment in time. So obviously, the hammer is, at one moment, this candlestick was completely red. Looked terrible, like whatever the asset is you're trading is just going down, 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 down. It's like, oh my God, we got to get out of this market. It's doom and gloom, protect the women and children, hit the bid, get out, ask questions later sort of moment. And at some point in time, like almost out of nowhere, but it's not, someone comes in and buys this whole thing back up, and this will, maybe retrace 70, 80, 90, 100%, whatever, maybe even goes green. Same reverse relationship on the other side. At one point, you're going up. It's like generational low. Oh my God, we got to get in. FOMO. I'm never going to get a chance. I'm never going to get a better price. Buy. And then it hits this spot, and down it comes really aggressively. This is the part I want to focus on just real quickly in the beginning. I want you to take it for a moment, and I want you to think about emotions. As I like to say, emotions are the abandonment of intellect. So you're training yourself, you're studying, you're learning, you're doing all of these things to try to be successful. And then you hit this moment emotionally. Trust me, I've been there a million times. That's why I'm saying it. You hit this point emotionally and you just blow everything out the window and start smacking buttons. And that usually turns out to be a horrible idea. So the significance of the candle is that one moment, most of the market participants are focused in one direction. They got tunnel vision, like, oh my God, we're going down. Like, oh my God, we're going up. We're never going to pull back. Oh, we're never going to bounce again. Oh, this is the end of the world. And they're just moving and moving and moving and moving. Then all of a sudden it stops and it aggressively comes back. Now, why it aggressively comes back is at some moment in time, What we all need to understand is that big money moves markets, and you may already know that. But think about this theory. At some point, somebody, something, someone, I mean, call it whatever you want, it makes no difference. Somebody of enormous strength and power with huge money, because it takes huge money to move a market. Somebody with big money or a collective came in and bought that thing back up. Now, here's the next question you should ask yourself. If somebody comes in there with that type of bankroll, with that level of commitment, then how are we ever going to get beneath that person? With that kind of money, they are sort of your guardian angel. So our theory is we want to try to buy, and I will show you this here when we to the charts. We want to try to buy into that person, right? Because that's our safety net. So here's a common problem that a lot of traders suffer. I certainly did myself. You get stopped out, and then the trade worked, right? You're just getting shaken around. I don't know if it's going to work. I don't know if I got a handle on this thing. I'm just going to get out. I don't think it's going to work. 20 minutes later, you come back, you look at it, and it's just whipping through the screen, and you're not in it anymore. Common problem is because people put stop losses emotionally, right? Emotions, abandonment of intellect. They put emotional stops or financial stops, not technical stops. Once we identify the big buyer or big seller, it's easier for us to go with that person and let them have our back. Again, our guardian angel that will be there with this huge bankroll to protect our trade. That's confidence, right? It's not a bunch of lines drawn on a chart because they don't have to buy a trend line. They don't have to buy a moving average cross. There will be a specific area, call it liquidity, call it support, call it resistance, call it whatever you want. And I'll show it to you where they're going to do that. That is the actual significance of what you're seeing when it comes to the candle. We'll discuss that even more. As with all technicals as well, what matters is the context of what we're talking about. Every asset has a context. Like, what kind of market are we in? We bullish, bearish? We're going sideways? And for me, what helps the John Wick strategy the most is maximizing those emotions. So if this thing can move down in a series of candlesticks really aggressively, really getting people to panic, then hits the wick, it's game on. Vice versa to the upside. If you've just got a lopsided rally, it's buy, get in now, and it's just rip, chase. That's it. Because you want to take advantage of those people that can simply not control themselves in a market situation. So the path and the context really enhance the quality of the trade. And obviously, the last is the level in which this event takes place. Another thing that I struggled with a lot when I traded. So like we learn this technical pattern and then we stuff it into a market. But not every single level down the ladder is important. If this move happens in the center of a chart, if that's a little too advanced for you, trust me, I'm going to go over all of this. But if this move happens at a random level, a non-important level, it's a move that really can't be trusted to its fullest. We want to be doing this at the precise time, which I will show you far in advance before the candle ever gets developed. You're going to know when to do this. And that way you can think this whole process through. You can get the strategy down the way you want. You have everything that you need to execute perfectly. So we're going to go through the candle setup, the path, and the context. This is always important with everything you trade. The context. How did we get there? And where is this level? Every level is important. Not every price has the same quality to it. So let's focus on these things right now. And we'll bounce over to some real-time charting, and I'll show you exactly what this looks like. That way, we can take one step further. I'm going to start out here on the screen with a recent chart of the NASDAQ or the NQ, whatever you'd like to call it. And this chart is from September 26th of 2024, if you want to compare notes. And we're going to look at it in 3 steps as it should happen in a real-time environment. And that is first, the context, the path that it takes. And during this path, we really want to focus on market emotions. The second is we're going to start forecasting ahead of time valuable levels. And you're going to learn that not every level is created equal, but each level down or up is going to answer questions. That way we can position, reposition, or make adjustments to any kind of trades we may have. And then, of course, looking for this John Wick candle to appear. Now, also, I'm sure many of you, unless I was the only trader ever in the world that attempted to catch a falling knife and got my hand practically chopped off. A lot of reasons that happen is we are just buying and selling for the sake of it's overbought or it's oversold, which is a terrible word in markets. Like, what constitutes overbought? What constitutes oversold? So if you're using like an RSI indicator, if it says 90, that doesn't mean it won't go to 95, 97, right? Like, overbought can remain overbought, oversold can remain oversold. There has to be some significance, right? Significant candle to switch that balance of power. So here we are with the NASDAQ, and I'm going to draw a few levels. This is a 5-minute chart. It will work for whatever you, we'll go through different charts. You can work 1-hour chart, 4-hour chart, daily chart with just a few minor adjustments. So this is the pre-market right here, is this massive move all the way up to this point. So let's talk about that. Emotions. Oh my God, the market's breaking out. It's a few ticks from all-time high. I got to buy this. I got to buy this. I got to buy this, right? Emotions, FOMO, right? Market opens up right there. This is why you never chase. Right from the open, it starts getting smoked. Now, anytime something's aggressively moving up or moving down, the theory should always be look left. Start looking left and gathering clues where reversals may happen or where things may happen. So you're going to have a based pivot right here. You don't have to be fancy with this. I'm going to draw just some cheap old lines. There's one level. Here's a based level. Now, if you don't understand why I'm drawing these levels and where I came up with these formulas, just cut and paste or just cut or screenshot this, look at it. If not, DM me or put it down into the description box here of this video. And if you guys just type in the word levels, I'll actually do a level video and we'll go into a much deeper viewpoint. But let's just stay focused. Now, because this market is up so much, the very first few levels, and also because it's a smaller chart, remember smaller charts, smaller time frame charts, sketchier level, bigger time charts, better levels. On a scale of 1 to 10, in my mind, judging 10 as the best, 1 as the worst, I would give these levels right here about a 6, and this would be a 10. This would be a 10 because this is the daily chart breakout. That's where there was a confluence of both buyers and sellers on multiple time frames that all came together at one price and drove this thing up, okay? That's the premium number, and that would be the most logical area for this to bounce. Here's why this is important and why the John Wick is important. Now, it dives quickly into the first line of support, but notice the candle. There's no wick. John Wick does not show up to the party at the first level. That's the key. If he doesn't show up, it's not going to bounce. So one thing about levels is when you get there, you get your answer. So you could be saying, I am going to buy at support. Traders say that. I'm going to buy at support. Hit support, you buy, and then it just blows right through it. And you're like, oh my God, that was painful. This is why it's not a premium level, right? There's no wick. Nobody showed up. The whale said, I'm not taking it. I want better price. Moves quickly. Notice how quickly it moves right to the next level. There's 0 attempts in these candles. There may be a teeny little wick. There's like nobody wants this. That's your clue right there, guys. No matter what you're trading, the candle's telling you nobody wants to buy this. And then what it does is it tries to go all the way down. Now, here's something I want to show you just as a little sucker move. Notice you get a little tiny wick right in here. Right in there. I can't really open this up because I got it on a video. Take a look at that. And if you have that chart, look at that. That's not a buyable wick, only for a scalp. And here's why. That is not a premium level. You're buying a John Wick. It's not even a John Wick at that. It's just like a random wick in the middle of the chart. This is a huge problem for a lot of people, was for me, is we're just trading at nonsense, noisy levels. And again, the lower the chart frame, the more noise you're going to get. Keep that in mind, and I'll show you other chart frames here. And then you just blow, and you blow through the premium level. Then you get down into this deep level. And here is what you see. I'm gonna clear this out because I want you just to look at this. And I did it in a recording so you can see what it's supposed to look like. Notice when it gets down there, take a look at this candle. You see how it's just, call it dancing, call it flickering. You see this? You see that? You see, just look at it again. Just look how you see it, right in that predictable zone. There he is. There is the big buyer. You see it? That's the significance, right? That somebody came in, because this move right here has not happened the entire time. And not only has it not happened, it finally challenged a deep level. There's always this saying in the markets that the market or the asset will drive the price high enough up to create a seller, and it'll drive it as low as it needs to find a buyer. So in a case like this, that's what you're doing. You're just looking for a buyer, and there you find it. And then we'll move a little forward. You'll see it's a pretty massive reversal, right? And you move all the way up here, okay? Quite a significant amount of points, a few hundred. Now, there's a couple of ways. Let's talk about making a trade. You have a scalp kind of trade for the really, really aggressive trader. Then you have, say, more of a relaxed day trade that you can do, or there's also the swing trade, the multi-hour trade that we'll talk about. In most cases, when you see the wick, the actual premise is the entry is on the next candle that moves above here, right? That breaks the John Wick candle, and you enter on the break. This is the theory, but remember, everything is in context and things can always be adjusted. And the stop loss is lower underneath of the wick. So the entry is there, the stop loss is under the wick, and then you're trying to backtrack some of the prices. Now, in a context like this, when the market is super emotional, it's not going to work. Again, I'm not going to say that his strategy works every single time, every single market. There's adjustments that you have to make it work almost every time. And this is one of them. You obviously can't buy the candle right there and put a stop all the way down there, because that's way too much risk to take in a sketchy market that's full of emotion, right? So if you are an aggressive trader, and this is your market cycle, you would go in the moment you recognized the buyer, okay? The faster you could pick this out, you get in it, right? So for me, on a scalp, on a quickie in a market like this, I would take it just about right there. As soon as this, and here's a rule that I'll use to make it easy for you, to give you a straightforward example. This candle, half of this candle gets retraced, I'm in it. So that would be about right, let's say right there, I'm in. Stop is right here. And in this kind of situation, with this kind of drop, I'm looking for maybe a quick retracement back to one of these upper candles. And again, this is something that you'll have to learn. I can do a video of this if you want, about market cycles and understanding that you have to make adjustments to your technical analysis based on emotional events like this. But let's get back on topic, and you'll see you get a nice pop. That would have probably been the sell right in there somewhere in that spot for me, okay? That's the way I would do it. Another way to look at this, and I'll show you some more charts, is there's a possibility in a lot of these cases, especially if you're looking for a little, let's go back right to this point here. Let's go back to, this point. That many times, like right here, okay, a lot of times you don't have to do the scalp, the aggressive trade, because the market will come back in like here. Take a look at this. You got your John Wick here. It's a small break, comes back in, hits John Wick again, rallies back up, hits John Wick for a third time. There were 3 tests here. There's 3 or 4 tests here. And you'll see it actually does come back to try to get in it. I think for most traders, this is the better strategy. Rather than just jumping in, you only can do that if you have a confidence in a well-rounded scalping strategy. But if you don't want to do that, the next thing, right, is to look for John Wick to get retested. The more times he can get retested, the more times it solidifies the chart that you're looking at. The more times that should give you the confidence. So see, this is the thing about technical analysis and YouTube videos, is people like to show you, oh, this chart worked, this chart worked. There's a lot of noise, especially in a 5-minute chart. So I'll try to draw this out the best I can. Let's say you have a John Wick. You can often make a rally, right? And then you can come back in and test them again, right? There's all these shenanigans markets like to play, right? And you might get something like that, 1, 2, 3 tests. All you ever need to do is just make sure you monitor this buyer. So if this pulls back, the trade's still valid as long as he shows back up again, right? Comes back up. As long as it keeps showing, eventually it should find its way up. And that's the thing. We don't know when it's going to happen. We just have to kind of reduce the excuses like, well, he's back, he's buying, he's continuing to buy. It should eventually go up. Now I'm going to move to some real charts and show you what it looks like in real time. So I recorded one here real quick for everybody to see in increments. So I apologize for some of the sloppiness. I just want to kind of go through this here. I had a ton of things going on and I recorded this whole entire thing. So it's a little bit choppy, but I want you to see what a trade looks like in real time and how to execute the trade. And just so you can get on the same page and start putting this into your trading business. So here's a chart of the YM, the MYM, the Dow Jones, whichever one you want to call it. And first of all, we want to take a look, obviously, is at the path. How did we get here? We see huge emotional buying, monstrous moves straight up from 42,600 all the way to 42,009. Just a monstrous move. If you happen to catch that long, good for you. Now, you'll notice there is something I want to talk about that maybe other YouTube traders are reluctant to do because they want to make themselves look good. But look, this is trading and it's an imperfect world. That's why everything we ever do will not always be perfect. We have to make adjustments. There are a lot of shenanigans and fake outs and shakeouts in small frames. This is a 5-minute. And I always want you to be aware of that because some of these trades will not work. And that's okay. You just want to make sure you put yourself in the best position. If it doesn't work, it's not going to hurt you. And that's the beauty. And I say that because I didn't realize this earlier. There were a few John Wick bars right here. And you'll see, according to the way I like the strategy, you get the presence of the seller, then you take out the bar. And there actually is let's call it a little flash dump right there, right? But the market quickly snatches it back up and it pops through the high. I want to highlight that because if I would have been present right here at the computer, I would have taken that trade. Now, I don't know if I would have covered quickly as it started and just did it as a scalp, or I would have lost money on it. But one way or the other, what I want you to know is that's also the beauty. When you look at what the downside could possibly be, is if you would have taken that trade, you either would have walked out with a small amount of money or you would have lost a little bit. And that's okay because you could try it again. Remember, nothing is perfect. And this is at all-time highs, so we don't really have a premium level up top to look at. Now, you'll see back up here where we are right now. And I've already put an order in this and it's already filled. And we're going to get to that in just a second because I've paused the chart. Because we've already moved up and it's been very, very slow. The movement's been very slow. I want to see a break of one of these wicks. You look very closely. Unfortunately, I cannot open it up because it's a recording. If we get a break there, that's where I put the order in. I'm going to just kind of move forward a little bit. And I want you to see what happens as soon as you start to press through that. You see how it gets a little bit more aggressive. Now right there, that's the entry. The entry is getting through that piece and placing the stop right there. You see, I already entered here just a few contracts here on the MYM, just taking a small trade. And we're going to target this base right here at the actual base of the previous breakout. And I'll show you that. Right here, we're going to be looking for this 42,855. So when it comes to the targets, that's kind of what we're looking for. We're looking for this to revisit each one of these pivots. And if you can get through the base of this one, that's actually possible. Now, again, this is something that is up in the air when it comes to targets. All we can do is get into the trade and manage our risk and let the thing manifest. But here's what we also want to look at. As long as that seller keeps putting pressure on up there, the trade's still legit. It might not work right away, but it's okay because it should eventually get there. Now, I went ahead and just sped forward because this thing is taking a little bit of time. And again, I got 100,000 things going on, but here is exactly what you want to see is that you are pulling down, you have failed attempts to bounce it, And now it's just a matter of stopping out everyone who chased it. And for all intents and purposes, it should make it down to this level. And who knows? The point is still in this thing. And we are currently, let's take a look. I'm going to roll it forward here just a little bit because you see it just keeps fading. So we've got about $150 here so far, and probably about 20-30 minutes of trading. Not a lot, but that's what you should end up getting. Now I'm going to have to cut this one short because I got to finish editing this video. But it's not about how much you're making. You can put full size contracts. You can change your approach. You can adjust everything that you want. The purpose is what you're seeing. Is the wick will identify where you have your largest buyer or seller. With that information, we want to position ourselves against that buyer and seller. If they get taken out, which sometimes they do, you see it right there on the chart. If they get taken out, well, then it does usually pop a little bit higher. Take that information and do it at one. Maybe buy that, right? There's a lot of different variations you can use and creative strategies that you can put on top of that, as long as you understand what the principle is and what you're getting yourself into. The rule here is this, the golden rule of please don't. You do not want to become the buyer up here against that. And you don't want to become the seller down here. Like, this is not the place to short. This is not the place to buy. And I'm pretty sure most of you know that. If you can just stay away from that, things are going to turn out pretty good. Now, I fast forwarded again just a little bit more to show you. I keep coming back to this chart, and there it is again, just continuing to do exactly what it is that we want to do. And like I said, here it's just a matter of just let it go. Let it go. So we're up a few $100 on this trade in a matter of about 40 minutes or so. I mean, and that's just on a small contract. If you get comfortable and you put a big contract, well, we're talking, I don't know, a few $1,000 in just a matter of 20, 30 minutes. Very possible if you know what to look for. Now, to finish this up, I just want to quickly go through a couple of different charts just to show you, look, it's universal. Like, here's AMD today. Look at all of the wicks, identifying the buyer, acts as stability. Towards the top side, you have the presence of the seller. Again, the second day, the presence of the seller, and that becomes the rejection. But look at this chart every single day. You are pressing downward. You find the John Wick, and that marks the bottom, right? And it moves back up. Take a look at the next day. You pull in. This is just even on a subtle day. And that marks the bottom and it pushes back up. Kind of like the check mark strategy I did the other day. Take a look at the push, right? You find a base, which is right into all of this mess from the previous days, marks the bottom, up it goes. And it keeps repeating that almost every day. You'll see, here's a little bit of shenanigans. You pop up, you come back, you test the buyer. More times you test, the more likely it is to go higher. Works on daily chart frames. I think it's Google in my head had a setup like this on the daily. Yeah, it's down here. Let me see if I can open this up for everyone to see. You just use it on the daily. Right there's the wick. I'm sorry, but the screen recorder's cutting through the bottom of that. There's your wick. You've broken the wick, right? And since then, it gapped up over. It's not stopped. It's not stopped at all. So you'll see these things all throughout the day. The Russell 2000 today, take a look. Take a look at these wicks. Take a look at turmoil. Right here it is. This patch right here, daily chart. If you're a swing trader, there is your wick. There's your follow through. It's not even come close to testing that before. If some of you remember just a couple of weeks, maybe months ago there, huge drop in the markets, right? Huge drop way back here. 1,000 points out of the NASDAQ. It was just like, oh my gosh, the world's coming to the end. Israel's bombing Iraq. Well, right here, big old buyer. See him stepping in? See the old John Wick right there, guys? Right in the sweet spot. Shows his cards. It's never got there since. It marks the bottom. So sometimes you may come back and test the bottom. Sometimes you may come back up and test the top. But the point is, once that person has been identified and their intentions become identified, then you can confidently make a trade. So in a recap, I hope you've enjoyed this video. I hope you understand the John Wick strategy. If at any point I got a little loose there as the time has worn on, ask any questions that you wish. Just remember that when you're making a trade or you start to put this in, we first want to look at the run-up. How did we get there? Was it fast? Was it slow? What was that path? Then start looking for those premium levels and start plotting out. There's probably going to be that John Wick bar there, maybe there, maybe there. Now, the beauty is if the John Wick bar does not show up, it might not be ready to bounce at that moment in time. It might be too early to enter that idea, right? We need that confirmation of the candle to tell us they're ready. It's ready to bounce. Remember, our ideas don't mean anything, right? They have to follow along with the big money, and that's the way that we're going to identify it. If you're trading in a scalping strategy or you're trading in a 5-minute charts or sub 5-minute charts, you're probably going to get a few tests of that John Wick. There's going to be a lot of heart monitor, stroke patient kind of activity in between before it takes off. That's typical with small charts. Remember, as long as the buyer keeps coming in there and you tap on him a few times, or you tap on the seller if you're going to go short, you'll eventually get the move. Just keep monitoring that zone. And over time, you'll figure that out. Now, if you're on a 1 hour, you don't really need all of that. If you're doing a swing trade, it's just like I showed you right here on the daily. You're just looking for that wick to start getting involved, marking the bottom, and then just letting that trade work. So I hope this video was enlightening. I hope you find this strategy useful. If you have any questions, make sure you reach out to me. I'll be glad to answer them the best way that I can. Also would like to mention that every week we put together a watch list of the best trades, the best stocks for that week, and an overall market view, both technical and fundamental, at therumors.com. The link will be down in the description box. It is free. I'm not asking a single thing for it, just sharing my knowledge and information with each and every one of you. And I want to thank you for watching this video. Until next time, cheers.